Welcome back. Now, the private equity space has begun this particular fiscal year with a bang. In the first 3 weeks of this fiscal year, we've already seen 2 large transactions when it comes to private equities exits through block deals with good amount of returns. How is the traction going to continue when it comes to the PE space in this financial year? Let's go across to Sanjeev Krishna of PwC, who's joining us with expert take on this particular space. Sanjeev, so good to have you on Big Deal. Now, how has the last year been in terms of numbers? $8.6 billion worth of exits. Is that expected to increase by multifold in this particular financial year?
Yeah, I mean, last year we saw almost $24 billion coming in, at the same time almost $8.6 billion going out. Last 3 years, if you look at it, $26 billion have gone out of India, which is great news because, a lot of money came into India over the years, but money was not going out. Today, I think except infrastructure, I think most of the other sectors, there are significant exits which are happening. I would also say that the public markets, the robust public markets have helped some of these exits, and considering what we have seen in the first 3 weeks of this fiscal, I would expect that the exit activity in particular would be very significant in this coming year.
Yeah, so good equity markets, strong equity markets, which are really going up in terms of valuations. So that's really helping the exits by private equity investors, Sanjeev. But what could be a dampener is the way the currency is playing out and dollar has been weak.
Absolutely. I think, some of these investments were made when the dollar was at anywhere between 38 to 45 rupees. Today it is 65. So clearly from a dollar return standpoint, I don't think some of these will be as profitable. The good news, of course, is that the exits are happening, and I think that really helps future fundraising, and it also helps how India is looked upon. I mean, it sort of increases the credibility in the minds of the investor group, and I think that is where the significant exit activity that we have seen has been helpful.
Right. So in terms of now themes for this particular year, we've seen, Sanjeev, that last year, in fact, Canada-based funds were the biggest investors in the Indian market. We've seen Fairfax, Brookfield, CPPIB, CDPQ, all of them investing. Is that trend really going to continue? Or are we going to also see other geographies and other investors also really coming to India?
So you are absolutely right. I think the funds that you mentioned and few others, I mean, if you dissect the fresh investment activity, I think a very significant chunk is contributed by them, by the pension funds, and maybe few of the other sovereign funds. So I would say almost 35 to 40% of the investments really was attributed to some of these funds. Which is good news. I think what's also been happening is they have been investing in late growth slash buyout opportunities, also been amenable to setting up platforms with Indian partners, and all of this is good news from a India private equity standpoint. You asked the question about other geographies. I think we are seeing some amount of activity from the East as well. There have been a couple of deals which Chinese investors have looked at in India, and thankfully some of those have got consummated now. So I would say the pension funds, the sovereign funds, and I'm actually particularly excited a little bit about investments from the East as well for this year.
All right, hope so that more such geographies really come and participate in the India growth story when cash is so much in dearth here at this point. But what do you have to say about consolidation bit? Of course, the online consumer space, that is seeing a fair bit of consolidation, and that would also require a huge amount of fundraising. How is this space panning out, and how is private equity really participating in this?
Yeah. So in a way, consumer internet space was pretty muted last year, and I think we are already seeing this year a significant amount of consolidation which is happening. Of course, there is the consolidation which is happening, in the names that are being spoken about in the press right now. But also in the early technology space, I can see that there is some amount of consolidation which is happening. Now, some of this would require funding, and people have for long been thinking thinking that there is space only for 2 or 3 of these players in India. So we have got down to 3. We'll possibly stay at that. And also in some of the other spaces, we are seeing investment activity pick up. But the consolidation is not just in the consumer internet space. If you look at it last year, there have been significant consolidation in the brick and mortar space, which has been noticed. And we will continue to see that also pursuant to the provisions of the insolvency law, which is going to ensure that some more of these deals come to the market.
Right. So hopefully this particular area will remain active. There's another area which is stressed assets side, and a lot of private equity players have really shown interest, but nothing meaningful has really happened so far. Do you think that Bankruptcy Code now coming into place, there will be something this financial year that we can watch out for?
I would expect so. I think the banks are now really, making use of the law and filing for insolvency at a number of the lenders. Now, some of these situations would possibly have a resolution by selling part of the business or by selling whole of the business, and I think it's going to be a good opportunity for some of the some of the private equity funds to look at assets which they believe are operationally good but have had a poor capital structure. It sort of gives banks an exit, but more importantly, it gives some of these funds good operating assets which they can then work on reviving. So I would expect that this year, maybe towards the second quarter of the year, from then onwards, I would see some of that activity panning out in FY18.
That's right, Sanjeev. But, it sounds very good on paper, but it's very difficult to implement. And that's what I have gathered from most of the participants interested in this particular space. So we'll have to see how those hurdles really get cleared out. But if that were to happen, more buyout opportunities for private equity players, that could really gain momentum, because there are very few strategics with enough cash at hand. So there could be more private equity players either tying along with them or else totally buying out the assets and operating it and then selling at a later stage.
Yeah, I think you're right. I think that is what some of these funds will endeavor to do. They would basically like to buy out some assets which they believe have enough value, which they can, a lot of these funds have operating partners these days. And I think the intent would be that together with the operating partners, take on these assets, revive them, get them back where they're generating a decent amount of cash flow. And then, as you said, look for corporate buyers for some of these in due course of time.
Right. So finally, which are the sectors that are expected to see maximum traction and investments coming in from the private equity participants? What are most queries really revolving around, Sanjeev?
So I think we continue to see a fair amount of traction in recent times on the renewables and the road side. I think we continue to see a fair amount of action even on the financial services side, real estate side as well. We talked about stressed assets. I think a lot of industrial businesses and sectors on the manufacturing side, I think those, if really the insolvency law picks up in terms of private equity guys being able to pick up those assets, I think that's the other piece that I would think will show up in numbers if you were to talk same time next year for FY18.
All right, Sanjeev, all the best to you as well for this financial year. And looks like the private equity space will really see good momentum in this financial year. Thanks so much for joining us. So that was a synopsis of how the private equity space is really going to pan out in this financial year. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.